If you're thinking about moving to California and you haven't thought about insurance, or maybe even consider the challenges many people are experiencing with insurance, well, in this episode, we're going to break it all down so that you can really make an informed decision, especially moving to Redding. Hey there, welcome back to Rooted in Redding. I'm Faith Barrett, your local guide to everything here in our area. And today we're diving into a topic that is critical for anyone living in or considering moving to California, and that is the wildfire insurance crisis. Now, if you're new to our channel, don't forget to hit that subscribe button as we share weekly updates about Redding and the housing market as a whole. Now, let's dive in. This is a really tough conversation, but it's one we need to have. I always tell my buyers and sellers, I know that interest rates can take up a big part of any conversation when it comes to affordability and buying a home, but at least you can try to buy down a rate or sometimes have temporary options. Whereas with insurance, well, depending on the fire score and where it sits, sometimes you're really stuck with one option and it can be pretty costly. So it's no surprise that wildfires are a reality here, and they've created a ripple effect that's impacted homeowners, renters, and even businesses. Now, my goal today isn't to steer you away from California, because really it's a beautiful state. I love where I live, and many people still choose to live here despite the insurance crisis. However, as I always say, knowledge is power, and today I want to help you understand what's happening so that you can make an informed decision. So today we're going to break this step by step, from how fire risks are assessed and how they affect insurances, to challenges faced by the great California Fair Plan, and finally what's being done to stabilize things. So let's get started. So let's begin with the fire hazard severity zone maps. These maps are created by CAL FIRE, and they classify areas into three categories: moderate, high, and very high hazard zones. Now, a quick way to know if a home is in one of these categories is looking at the Natural Hazard Disclosure Report. It's an automated FEMA report that a seller provides when selling that identifies if the home is in a flood zone, an earthquake zone, and or a fire severity area, that being moderate, high, or very high. Now, in regards to the fire hazard severity zone maps, they're not just academic tools. They're directly influencing building codes, fire safety regulations, and most importantly for our discussion today, insurance rates. So how are these maps created? Well, CAL FIRE looks at vegetation. What kind of plants are in the area? Are they dense or are they sparse? Dry vegetation is prime fuel for wildfires. Topography. How steep is the land? Obviously, fire spreads faster uphill. The third thing is fire weather. This includes wind patterns, temperatures, and humidity levels, as well as historical fire data. Has this area burned before? If so, how often? So here in Redding and across Northern California, many areas fall into the high or very high hazard zones. These designations come with stricter building codes, like requirements for fire-resistant materials and higher costs for maintaining defensible space around your home. But perhaps the biggest impact is on insurance. So homes in these zones are often flagged as high risk by insurers, leading to higher premiums or even outright denials of coverage. And we'll talk about that more in a moment. The second part I want to go through is fire scores and how insurance companies assess the risk. So if you've ever applied for homeowners insurance in California, you might have heard about these scores without fully understanding what they mean. So fire scores are essentially risk ratings that insurers use to determine how likely your property is to be affected by wildfires. Now, they typically range from 1 to 100, and the higher the number is, the greater the perceived risk is. So how do insurers calculate these scores? Well, they use advanced models that consider 1, environmental factors. This includes vegetation density, slope steepness, wind patterns, and drought conditions. 2 is property-specific factors, like is your building materials fire resistant? Do you have defensible space, like have you cleared brush around your home? And what's the accessibility, like can fire trucks easily reach your property? The third thing is community factors. How close is your nearest operating, not volunteer, fire station? Has your neighborhood implemented fire mitigation efforts or earned a FireWise USA designation? If your home has a score above 60 or sometimes even lower, many insurers will either deny coverage or charge significantly higher premiums. And for homes with scores above 80 or even 90, it is almost impossible to find private insurance. Now, this brings us to our next topic and what happens when primary insurance say, no thanks, I'm not insuring your home. Welcome to the California Fair Plan. This is a state-mandated insurance program designed as a last resource. Remember, I said last as we go through this. So homeowners who can't find coverage through private insurers revert to the Fair Plan. The Fair Plan provides basic fire insurance coverage, things like damage from fire, smoke, or lightning. But it's important to know what it doesn't cover, which is liability, theft, water damage. So for those additional protections, you'll need a separate policy, which we call a wraparound policy. So typically you'll have a California Fair Plan plus a wraparound policy to cover you with those additional things. Now, the Fair Plan has grown dramatically in recent years. As of 2025, it covers over 450,000 policies statewide, representing $458 billion in exposure. Yet it only has about $200 million in reserves, which is far below what's needed for a catastrophic wildfire event. The plan was never meant to handle this level of demand. Remember when I said the California Fair Plan is the last option? Well, it was designed as a safety net, not as a primary insurer for such a large portion of California homeowners. But unfortunately, since this insurance crisis, so many people have had to switch to California Fair Plan because that's literally the only option. Let's look at the recent LA fires, including the Palisades and the Eaton fires. Now, these fires have been devastating for both homeowners and for the Fair Plan itself. The total losses from these fires are estimated around $4 billion. Now, the Fair Plan, which a lot of these people had in LA, has already paid out $914 million, with another $3.125 billion reserved for unpaid claims. Now, this has forced the Fair Plan to dip heavily into reinsurance coverage, but only after paying a massive $900 million deductible. To make matters worse, they've had to request an emergency $1 billion assessment on private insurers just to stay afloat. And even with these measures, their cash reserves are projected to drop below $400 million by mid-2025. This situation highlights just how precarious things are. So if another major wildfire season hits this area or next, it's going to be very hard on the California Fair Plan world to stay afloat. So your question is probably like, what is being done? Because truthfully, California cannot continue to operate like this. Well, the insurance commissioner has introduced several reforms under what's called the Sustainable Insurance Strategy. Now, here's what's included. Number one, it's requiring private insurers to return. Insurers must now write policies in high-risk areas proportionally to their market share elsewhere in California. Number two is recognizing mitigation efforts. Homeowners who have hardened their homes with fire-resistant roofs or defensible spaces must be offered discounts. Number three is expanding reinsurance options. The California Fair Plan has increased its reinsurance coverage limits, but still faces challenges with the deductibles. Number four is improving oversight. New transparency requirements aim to ensure better management of Fair Plan funds. Now, in addition, there are proposals on the table for state-backed loans or catastrophic bonds that would provide liquidity during extreme wildfire seasons. So what does this all mean for you as a homeowner or someone considering moving to California? Number one is be prepared for higher cost. Wildfire risk have made insurance more expensive across the board. Number two is home hardening matters. Creating defensible space and using fire-resistant materials isn't just about safety, it could really make all the difference in qualifying for an affordable insurance. Number three is understand your policy. If you're on the Fair Plan, know its limitations and consider supplemental coverage. Number four, factor insurance into your budget. If you're house hunting in California, don't overlook insurance costs when calculating affordability. If you're new to California and thinking about buying in California, something you should know is now part of your inspection contingency period, which is most commonly 17 days. You get to inspect whatever you want on the house, do your due diligence. Part of that inspection contingency contingency includes insurance now. So you could actually back out of a house within those 17 days based on just insurance. Now, for my buyers coming into the market, making offers on the home, I have 1 to 2 pretty quick insurance agents that I can get a quote from. So we either can know maybe what's worst case scenario or possibly best case scenario. So you have an idea of what that affordability is going to look like for the home that you want to purchase. Now, I will say with all these changes that the insurance commissioner is announcing, this is going to take time. Like, this isn't obviously going to happen overnight. And that's the frustrating part. And as I've watched California Fair Plan just become more and more the common plan that most people land in our area because of it being a very high or high fire severity zone that the house sits in, it just makes me think like California can't sustain like this. We just watched a really devastating fire happen in LA, and I thought to myself, some change has to come, because the idea of California Fair Plan being basically the main carrier for a lot of people in the state of California in these high fire zones is almost going to be unsustainable at some point. So I'm really hopeful that as things roll out, hopefully insurers come back into the market, State Farm, Allstate, Geico, all these people that left, there at least could be a conversation or a different option that somebody could consider over just California Fair Plan. I will have people message us or reach out and say, well, how much do you think home insurance is going to be? And truthfully, it really depends. Some of the key factors that I have found here in our area is that if you're within 5 miles of a working and operating fire station, not volunteer, unfortunately it doesn't help, you can have a little bit of a reduction in that policy cost. If you have a fire hydrant within, a certain feet distance from your house, that can sometimes bring down a little bit of a discount. But unfortunately, if you're more rural, which a lot of our properties can be more rural and just more out there, that cost really comes down to the size of the home, the age of the home, is there any fire mitigation like defensible spaces, newer roof, things that the insurance company can go, ooh, this isn't going to be as high of a risk versus this house that has wood shingles, the space isn't cleared, and it's just a huge fire ticket risk. So I will say on average for a California Fair Plan, in what I personally see, around $4,000 to sometimes $6,500 a year. That's kind of the range I just typically see. If you're more in the city of Redding, again, if we're looking at an average square footage of a home being that 16 maybe to 1,800 square feet, you could be somewhere around very high 2,000s, pushing into the low 3,000s. But again, this is not to quote insurance. I'm not an insurance agent. I just am saying on average, these are the numbers that I hear for an annual premium that most people are starting to see as a more common number. Now, like I said, you'll always have that wraparound policy, and that will obviously boost it up. So maybe the California Fair Plan is, let's just say $4,000, and then your wraparound policy typically lands around $1,500 to $1,800. Obviously, the square footage of the house can really affect that number. It could go up, it could go down, as well as the fire score and the severity. Now, with 2025 on the horizon, Cal Fire has released the plan of the fire zone mapping, and they're asking people in our area to please log in and survey what you think your property, is described as. Do you agree or you disagree? Make some comments, because at the end of the day, this is automation. There's only so much data that they can collect and then basically automate a response. And some people that I've watched the comments come through, I have seen people say, hey, like this isn't really accurate because I have a fire hydrant right outside my door. I have a lot of defensible space versus the neighbor down the street who's at the cul-de-sac with a green belt, is being color coded, at a lower risk. And why am I being color coded as a higher risk? So the map, unfortunately, isn't bulletproof. So I will say that you do have to advocate for your property. Unfortunately, you do have to try to work with your insurance agent to see what can I do to bring this cost down versus it just being an automated number that says you're high severity, so you're automatically $6,500 a year, your California Fair Plan, doesn't matter what you've done kind of thing. And this map, from what I could read online, basically changes every 5-ish years. So the frustrating part is, let's just say we have a really good fire season for the next 4 to 5 years we don't, experience any devastating fires, we have to wait for that map to update to eventually get us hopefully out of a very high severity zone to maybe a lower severity zone. So all in all, I'd love to say that it's a perfect solution. The insurance world is really quite a mess. I'm very lucky not to be in it, but I do service a lot of clients on a day-to-day basis who have concerns about insurance. And really at the end of the day, we have people who can get insurance. We have options. It's just finding what is the best option for you and what keeps you most protected and affordable at the same time. So as I said, unfortunately, change is slow with the insurance world, but from talking to a lot of my insurance friends, something obviously is going to have to change because the state cannot continue to run on this California FAIR plan as the main option. Now, you might be thinking to yourself, why do people choose to live in California then? Well, like any state, it has its pluses and its minuses. And California is an incredible place to live, from its natural beauty to its vibrant communities, but unfortunately, it does come with its unique challenges like the wildfire risk and its impact on the insurance markets. So by understanding these issues and taking proactive steps to mitigate risk, we can protect our homes and communities while navigating this evolving landscape. Now, I'd be curious, what's been your experience with the wildfire insurance, especially here in California? Are you on the FAIR plan or struggling with rising premiums? Share your thoughts in the comments below. I'd love to hear from you. And also, if you are struggling to find insurance or just want a good connection with some local companies here in our area, I'd love to connect you with the resources that we've been utilizing. So thanks so much for tuning into this week's episode of Rooted in Redding. Don't forget to hit the like button, subscribe to our channel, and hit that notification bell so you don't miss future updates about life here in Northern California. And we will see you next week.